Hi there, welcome to Grain TV. It's Thursday, March 31st, opening day for the 2016 crop year, with USDA giving us planting intentions numbers. We'll get to those in a minute, but let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn got hammered, losing 15.5 cents a bushel. Beans managed to shake off corn's negative news, gaining 1 3/4, and wheat closing higher, gaining 9.5 cents in Chicago. And Kansas City and Minneapolis up even stronger thanks to planting intentions. So let's talk first about the grain stocks report. This came out today, but really was overshadowed by the plantings report. The quarterly stocks report, generally we watch for that corn number because we have a big unknown in terms of feed use. This time we hit it pretty much on the head, with analyst expectations coming in at just a little bit over 7.8 billion bushels of stocks on hand as of March 1, and that's pretty much what USDA gave us. Soybeans slightly better than expected and wheat slightly worse than expected, but overall these numbers were just dismissed because the real news came in the form of much higher corn acreage of 93.6 million acres intended to be planted in 2016, well above analyst expectations, even the high end of analyst expectations, which reached up as much as 91 million acres, and certainly well above expectations of 90 million acres. So that's a 5.6 million acre increase over last year. That's just huge, and obviously hammered the corn market right out of the gate on that announcement. On soybeans, we came in lighter than expected, obviously because corn was higher, not overly so, still within analyst estimates, with 82.2 million acres to be planted according to USDA. And the big positive news of the day was on the wheat side, where wheat acres were a shockingly 5 million acre drop over last year, and well below analyst expectations of 51.7, coming in at 49.6. Keep in mind, this, if it turns out to be the actual number at the end of the year, will be the lowest wheat acres we've ever had since 1970. 45 years ago. So that is a huge drop in wheat acres. It didn't send the wheat market sharply higher because corn was obviously the focal point of everything going on negative today. So wheat had sort of a late stage recovery to get some momentum at the upside or at the end of the close, but overall the market was totally focused on selling corn today. But let's digest these corn numbers a little more, dissect them, I should say, a little more, and take a look at where those acres are being increased at. Obviously, pretty much across the board, everyone in the states are growing more corn, but we see some fairly anomalous trends here. First of all, in the plains, where we lost wheat acres, we're seeing that increase in corn acres. So I'm looking at the plain states all the way from North Dakota down to Texas, and what you can see is heavy increases in corn acres, totaling about 2.4 million of that 5.6 million acre increase. So that's a big component of it, because those producers in Kansas, in Texas, in North Dakota in particular, a big jump there, decided not to grow wheat and instead grow corn. So that's an area of the country where we just don't see the upside potential. We don't see huge yields like we do in the Midwest. So we're trading wheat acres for what you might call subpar corn acres in those states. The other area I want to focus on is the Delta, where we know they've had just phenomenal flooding problems in the planting season there, and we know a lot of those farmers have gotten washed out, and at best will be doing good to get any sort of replant on corn, and will probably end up switching to something like soybeans. So look at this, look at the change in acres here, and of course the magnitude is much smaller because these are Delta states where they're not growing much to begin with, but we're talking about a 1 million acre increase. Look at Arkansas, Louisiana, Mississippi. Most of that 1 million acres is underwater right now because of the intense flooding. So, is this a game changer? I think it is a game changer, but it's not a game ender for the corn market. We still have a lot of growing season left. Farmers were surveyed on March 1 based on their intentions. We know that the soybean market had rallied a lot in between March 1 and where we were at today. Corn market didn't do much of anything. We know flooding in the Delta states. We know dryness in the plains. So I'm not saying this market is completely dead in the water here. Certainly we may have some more downside risk here in corn, but I think it may be premature to expect, low $3 corn, and some analysts are even saying this puts the potential for a 2 in front of corn prices if we get this acreage number and a good growing season. But that's a long way away. The other news out today continues to be the strength in the Brazilian real. We saw the Brazilian real up as much as 2% today at one point, but managed to close around 1% higher. That's a 14% jump in the last month. Let's put this in perspective in terms of what it means for U.S. beans versus Brazilian beans. Last month in February, when we were trading at a severe premium to Brazilian beans, our beans were trading at $15 a metric ton more expensive than Brazil. Today, flip that around, we are now not only cheaper than them, but cheaper than them by $5 a metric ton. So this currency issue, while it's sort of taken a back seat, I think is going to come foremost and front center because we're seeing competitive advantage to U.S. beans. And so as China and other countries start to buy beans, they're still going to go where price is most competitive. And I think U.S. is now seeing a situation where we might be the best game in town. Let's switch gears and talk about the corn market. Again, it got hammered today. Here you can see the Dees corn contract just taking it to the downside, trading to new lows all the way down to 360, 366, 365 area before bouncing back a little bit on the close. There's still potential for more pressure here. This corn number is shockingly large, shockingly large, and I think there is potential for more downside risk here. I don't, I don't think we go 20 to 30 cents lower on this news, but I think there's still potential to maybe go into the low 360, maybe even the high 350 range on this news. But again, there's still a lot of growing season left. Farmers may decide to switch, and certainly today's numbers, before we even get any planting in the ground, may change farmers' incentives to do so. So that's all we got on Grain TV. As always, if you have any questions, give us a call, 877-472-4607. Or if you want assistance and need help in managing your grain marketing decisions, we have a lot of tools and a lot of ways to help you as a producer out there in these trying times. Find us online at grainhedge.com and take a demo of our trading platform to see how we can help you. GrainHedge is pleased to announce a new tool called Technical Alerts. Technical Alerts is free to our trading clients and delivered by email first thing in the morning every trading day. Technical Alerts is a powerful, easy-to-use system that provides quality trading opportunities. Each trading opportunity shows a chart and analysis, providing clear price targets and risk potential to allow you to make an educated trading decision. The commodities covered include grains, livestock, crude oil, currencies, bonds, and metals. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. Let's take a look at how to interpret a technical alert. At the top, you will see a red or green indicator arrow which signifies the market's likely move. Red shows when weaker prices are expected, and green for when higher prices are expected. The summary section shows the expected price target and the expected duration it should take to reach the target. Also, Technical Alerts provides both support and resistance to help you identify key levels on the price chart. Underlying support is where technicians believe there is a level of buying interest, while overhead resistance is the price level thought to trigger more active selling. The support is marked with the letter A on the corresponding price chart, and resistance is marked with the letter B. Below the chart, you will see the data interval of the bars. For example, a 1-hour data interval means the chart pattern was constructed from a 1-hour bar chart. And when you are using the GrainHedge trading platform, you can use the pull down on your chart to change the bar interval to the appropriate time period. As always, we strive to provide you the best tools to improve your trading and hedging activity. If you have any questions on how to use Technical Alerts, please contact us at 877-472-4607 or by email at support@grainhedge.com.